Well, 19,677 on the Nifty. We're up 113 points. Rajeev Thakkar is Chief Investment Officer and Director at Parag Parikh Financial Services Mutual Fund. Rajeev, great to have you with us here for this conversation on CNBC-TV18. And I believe you've the flagship FlexiCap fund has completed 10 years in May. So congratulations to you, to your team, to your investors as well. And I think you guys have done a fantastic job, widely acknowledged now. I was just looking at the latest portfolio where 18% of the fund is in overseas securities. And of course, I mean, it's large cap, the FANG stocks, right? I was just curious to understand this year, with the huge rally that those FANG stocks have had because of AI related themes, what has been the contribution to the overall returns from this 18% exposure in these names, Rajeev?
Thank you so much, Prashant, for your kind wishes and the good words. When we look at the performance of the international stocks, they obviously have rebounded very, very sharply in the last 6 odd months. But we have to look at it in context, where these stocks were the stocks which fell very, very sharply from the highs that we saw a year and a half back. So if we look at the Indian markets, we are at all-time highs in terms of our indices, whereas some of these names are even now lower than the highs that they saw earlier. So essentially, it's been just mean reversion in that sense. If we look at it from a one-year perspective, I think the Indian markets have done better than the overseas stocks that we own.
Hi, Rajeev. Good afternoon, Nigel on this side. Rajeev, HDFC, that's one of your big holdings in there, right? And the last, pull up the last 3 months or 3 years or so, in comparison to its peers, the stock performance has been a little bit of an underperformer. Look at a longer time horizon, it's one of the big outperformers. It's done very, very well. Do you think from here on now that merger is done, can HDFC Bank lead the way? And I ask this not just for those who are interested in HDFC, but because it's a large part of the index, both the indices, that's Nifty as well as the Nifty Bank. Can it be an outperformer?
Sure. So only time will tell whether it outperforms, and we will not get too much into individual stock discussions. But broadly, just to discuss the current event and things around that, typically whenever we see any such large transaction whereby a huge M&A is done, initially there are these upfronted expenses that come about. In a normal merger, there would be the legal and transaction costs and stamp duties and things like that. There would be IT integration expenses that come about, HR alignment across 2 different organizations. In the banking and financial sector, apart from these normal merger-related activities and expenses, there would be things like CRR implications and SLR implications, priority sector lending implications, whereas the benefits come somewhere down the road. Also, there would be this big volatility around this, some of it which has already played out, where index weightages are things people speculate about because of the merger. Now only one company is in the index, which leads to index weightage change. Also, active mutual funds will need to sell some stock. So there are various things which will play out in the near term, but longer term, I think logically it makes sense to free up the regulatory capital to have both the mortgage piece and the banking piece in one entity. So it's among our larger holdings, and I am positive for the bank as well as the overall private sector banking space in the coming period. I think next 3 to 6 months will be a period of volatility and a bit of up and down.
Rajeev, just on that point about the index weightage, etc. Now, for instance, suppose HDFC Bank has close to about a 15% weightage on the Nifty. No mutual fund can hold more than 10% of its portfolio in one stock, which means it's capped at 10%. Now, is there a possibility that mutual funds will tank up their holding, increase their holding in other banking names in order to make sure that at least the overall banking exposure, which could be 35-40% as compared to the Nifty, stays intact? So you make up that balance 5% holding between what HDFC Bank's holding is in the Nifty, weightage is in the Nifty versus what you're allowed by buying other banking names. Is that a possibility, and could it lead to buying in other names?
So all fund houses have different strategies. Some people very closely track the benchmark weightages and try to replicate that in some fashion, and for a big deviation they have to justify why they are underweight or overweight certain sectors. Those people may follow the strategy that you are suggesting, and I'm sure there are some fund houses which follow that approach. Speaking for ourselves, we are agnostic about the sector weightages in the index. We go stock by stock and try to figure out whether there is merit in owning something or not. So it may not apply for people who follow our approach of being benchmark agnostic, but I take your point. There will be a section of the active managers who will try to make up the underweight in HDFC Bank by buying into some other banks.
Rajeev, you all have been quite bullish on some of these PSU names. NMDC, Coal India, Power Grid. The last disclosure that you all have made as well, most of the money has been allocated to few of these names. You believe that there's still a good long runaway? Some of these stocks, because of ESG concerns, they are derated, they were not looked at. You all got in early in a couple of these names as well. What's the view from here on particularly these three?
So the entire PSU space has been very, very tricky for investors. And on a whole, if we look at the long run, the basket has underperformed for investors over, let's say, 5 years, 10 years kind of perspective. There have been certain specific challenges in the space. One challenge, of course, has been many a times the social objective has taken precedence over minority shareholder returns. So sometimes decisions in the companies are taken from the social context rather than a profit perspective. So that has been one challenge prominently in the oil marketing companies, for example, in the last cycle when oil prices were elevated globally and they were not raising prices domestically. The other big overhang has been the continuous selling in these stocks from the government side as part of its disinvestment program. And the third problem has been largely the capital efficiency and capital allocation policies and money being stuck in non-core assets. So I think broadly there is understanding in the government circles that a continuous divestment by small stake sales does not make too much sense. So there has been talk about some key privatizations. So this talk again has been going on for a long period of time, but we have seen most vividly a difficult decision being taken in the form of, let's say, a Air India privatization. We have seen certain demergers happening across a host of PSU companies where the non-core assets are being demerged into separate companies with a view to make strategic sales. So from these perspectives, it's somewhat of a changed environment where there is focus on capital allocation and monetization of non-core assets. ESG concerns have been there in certain sectors, especially around the fossil fuel energy and things like that. But those, I think people are coming around to the view that longer term, you have to transition away from them and you cannot just do a switch overnight and just write away these sectors.
Got it. Another, Rajeev, I don't know, I'll just read out the news which is coming in right now. And this is important. This is with regards to ZEEL. So ZEEL Entertainment is telling us that, in a board meeting which was held on the 14th of June, it's been decided to essentially constitute an interim committee made up of senior executives, which will now run operations. And this has been necessitated by the fact that by the recent SEBI order, which barred Puneet Goenka and Subhash Chandra from holding board positions. And of course, the appeal at SAT, which did not hold water, SAT refused to give a stay to the SEBI order, which had come through. which what this in that sense also in a way implies that you know that going forward maybe the role of both Mr. Puneet Goenka and Subhash Chandra perhaps will be much more diluted than before. In what capacity, etc., they may be involved, we don't know. But at least in terms of running operations of the company, I think this is a pretty big change which is coming through. If I may quickly read this out, I mean, I've kind of given you the gist of what the what the board meet takeaway is. But it goes on to say, the statement from the company spokesperson goes on to say, the interim committee will be under the supervision of the board, will seek guidance on all matters pertaining to the company. The board continues to have immense faith in the value-building leadership skills showcased by Mr. Puneet Goenka and will monitor the progress of the matter. The board also remains confident that the company will deliver robust returns for all shareholders. So this is the statement which is coming in. Rajeev, I don't know if you have any thoughts at all on something like a ZEEL. With that merger with Sony, of course, was hanging in balance. This may be, I mean, the counsel for ZEEL has been arguing in court that with or without the earlier management, the merger should go ahead. And the market seems to be betting on that fact. What would you say about this one?
So we don't own the company in question. We don't have a position in ZEEL Entertainment. And as such, I don't have any strong opinion. Here, I think largely it's an event-driven thing. The merger happens, does not happen kind of thing. It's more or less a binary. So I think the price movements will be largely news flow driven, and one cannot form any opinion in terms of business as usual kind of scenario. It's either the merger happens or does not happen kind of situation.
Okay, all right, got that. Rajeev, we'll leave it there. Thank you very much. Appreciate your time here on CNBC-TV18. Thanks very much. Well, we'll take a quick commercial break here. We'll come back and, as always, get you a check on what's happening in dealing rooms. Nimesh will get us that perspective. And, of course, buy today, sell tomorrow trades coming in with our technical experts as well. Stay with us.